Hello everyone, this is Yash Nama. Thank you for joining me on this video. In this video, we will talk about cost accounting as a technical and social practice, and we will also take a look at the general role and importance of management accounting. To start with, let's try to understand briefly what do we mean by accounting. Now, accounting is defined as the process of three things: identifying, measuring, and communicating, right? So we are interested in identifying, measuring, and communicating economic information to permit informed judgments and decisions by the users of the information. Now, we will unpack each of this in the upcoming slides, right? So we are not only interested in financial information. Accounting provides both financial and non-financial information, right? So we are not only interested in financial information, but we are also interested in non-financial information so that the users of the information can make decisions, right? So there are many users. We'll talk about the different sets of users we can think of. But important thing to remember is we are interested in both financial and non-financial information. I believe most of you might have seen annual reports of some companies. If you have not yet seen an annual report of any company, I would strongly encourage you to pick a company of your choice, go to its website, and within the website of most listed companies, you would see a section called Investor Relations. And in there, you will find annual reports of the companies. Now, most annual reports are fairly long. Right? A typical US or UK company has an annual report going well over 300, 350 pages, and I believe that's not too different from Australian listed companies, right? So, you have all sorts of information in these annual reports. Financial statements just probably take up, 50% of the report, but then you have a lot of other narrative where you have a message from the chairman, message from the CEO, message from the board of directors, all sorts of forecasts for the upcoming periods and their view on the economy, their view on how that might impact their business, and so on and so forth. So you have a lot of non-financial information constituting annual reports, right? So if you're in doubt, I would highly recommend just download annual report of any of your favorite companies, and you'll clearly see what I'm trying to convey here. So why would companies be interested in non-financial information? If you're, let's say, apparel, if you're in the fashion industry like Zara or H&M, would weather forecasts be something of importance for you? How sooner or later the winter is arriving, or how sooner or later the summer is arriving? Is that of importance for these companies? Yes, because they have to prepare their supply chain in such a way that, whenever the winter is approaching or whenever the summer is approaching, they have the appropriate fashion in their outlets, right? If you're a fast-moving consumer goods company like Heinz, right? So you have, let's say Heinz has ketchup, right? Heinz ketchup. Now, is weather forecast something of importance for Heinz? Heinz? I would think yes. Because what is the major input in a ketchup? Tomatoes. And tomato prices can vary substantially. I don't know how many of you have bought tomatoes here in the supermarkets, but I can tell you that in my 3.5 years experience in Melbourne, I've bought tomatoes somewhere between $2.50 to $9.50 or $10 a kilo. Between $2.50 and $9.50, we're talking about 4x difference, 4 times. 400% increase or decrease in raw material input prices can have significant impact on the income statements. In Australia, we had one of the most devastating bushfires in December 2019. And, during this bushfire period, and period subsequently after that, you would have noticed that the vegetable prices had dramatically increased for most vegetables in the supermarkets. Right? So any company involved in agri-processing or relying on agricultural produce would have been significantly impacted by the input prices due to the bushfires. Right? So in a sense, if we have forecasts about, how hot this summer might be, then companies can be better prepared in terms of managing their supply chains and hence their cost structures, right? So we can think of many ways in which non-financial information can be useful for companies. If you're an airline or if you're a cruise operator, would weather forecast be of importance to you? Extremely important, right? Because then that will tell you which route you might be taking, and then that will tell you how much fuel you might be consuming. And that will give you an estimated impact on your income statement and balance sheet. Because let's say if you have to take a longer route due to some adverse weather conditions, I mean, if you have to fly, let's say, from Melbourne to London, I mean, that's a fairly long distance flight. And if, let's say, this long distance gets even longer due to adverse weather conditions, then your revenue is sort of independent from the costs here. Because when you are selling your tickets, you don't have any idea of what might be the actual weather condition on the day of the flight, because flight tickets are up for sale like 365 days prior to the date of travel, or at least 365. I mean, I think you can book at least a year ahead, or at least most companies allow you to book at least 9 months ahead of your travel date. So in that sense, companies at that stage don't have any idea of what might be the weather condition on the day of the flight, and revenue must cover their costs, which they don't know what might be. They might have an estimate of what it might be, but they don't know what actually it might be. So in that sense, non-financial information is useful. I think what I've tried to do here is I've given you at least 3 or 4 examples where non-financial information can be useful for companies. So in a sense, we are interested in both financial and non-financial information in accounting, because that will help managers make decisions. Now, if we think about users of accounting information, we can broadly classify them into 2 groups. We have one set of users who are outside the company. They are the owners, potential investors, government, creditors, not-for-profit organizations, activist groups, so on and so forth, who are interested in companies' operations. Internal users are the people within the company, managers, employees, CEOs, who have to make decisions on the day-to-day operations of the company, right? So these parties have different requirements in terms of their accounting information. Because internal users, let's say managers, employees, they are not only interested in what has happened in the past, but they also are interested equally in what might happen in the near future. I'm not saying that external users are not interested in what might happen in the near future, but these people, because they have to make decisions, they will have a lot more information about what might happen in the near future, and they'll be actually making use of it. So in a sense, because their information needs are slightly different, what constitutes a management accounting report and what constitutes a financial accounting report is also slightly different. Now, the objective of accounting is to provide sufficient information to meet the needs of both internal and external users. Now, this classification of users actually provides the basis for our 2 sets of accounting reports, financial accounting reports and management accounting reports. Now, financial accounting reports are predominantly focused on providing information to people outside the company, and management accounting reports are predominantly focused on providing information to people within the company, users within a company or a business, okay? And where does cost accounting come into picture? Cost accounting provides input to both financial accounting and management accounting reports, right? So in a sense, it's an essential component of both financial accounting and management accounting, but we are interested in mostly management accounting side of things, because we are interested in cost analysis and organizational decisions, how companies make decisions, how cost analysis, cost accounting provides input to management accounting, and how management accounting helps managers make decisions, right? So that's what we are interested in. Financial accounting, it's for external use, whereas management accounting is for internal planning and control purposes. Financial accounting, because it is going to people outside the company, the reports have to follow or comply with a set of accounting standards. So if you are a US company, you'd be typically looking at US globally accepted accounting principles. And if you're a non-US company, you'd be looking at following international financial reporting standards. Whereas, management accounting side of things, because we're also interested in the future as much as we are interested in the past. I mean, the requirement of managers in terms of accounting information is very different from requirements of shareholders or other parties outside the company in terms of accounting information. So here, reports tend to be very creative in nature, and reports tend to be very user-specific in nature. So a CEO might require a different report. A sales manager might be looking at different information. A production manager might be looking at different information. Human resource managers might be looking at different accounting information. So each party within an organization might have different requirements. So in that sense, they don't really have to follow the accounting standards like the way the financial reports have to follow, right? And that follows that, regulations apply in terms of preparing financial reports for outside the company, but that's not the case for reports within the company. Let's move on. So what is cost accounting? So we view it as a subdivision of management accounting because we are interested in how cost analysis helps managers make decisions. So cost accounting is concerned with cost accumulation for inventory valuation to meet the requirements of external reporting. This is the financial accounting side of things. And it is also important for internal profit measurement. So essentially two roles which we are trying to look at for cost accounting here. Valuing inventory and calculating profit, right, is what we'll be looking at in two different methods of accounting, marginal costing and absorption costing. So we can calculate cost of an operation, we can calculate cost of a process, we can calculate cost of activities, products, services, business units, company as a whole, or a department within a company. We can pretty much calculate cost for many things in an organization, okay? So anything for which we calculate cost is called a cost object. Cost object is anything for which we will calculate cost. So if we are trying to calculate the cost of a cappuccino being sold at a cafe, then cappuccino becomes the cost object, right? If you want to calculate the cost of a cake being sold in a cafe, then the cake becomes the cost object, right? So anything for which we are calculating cost is called a cost object. So, and as I said, we can calculate cost of products, services, business units, processes, operations, activities, so on and so forth. Now here we are trying to give you the importance of cost and management accounting in this changing world, okay? Now, business environment constantly changes, right? We know this as a fact. Now, organizations have faced dramatic changes in the business environment, both in the past and as of now. In fact, I don't know how many of you follow news regularly, or even if you're signed up on Twitter, you'll see a lot of Twitter feed on business news and so on and so forth. You'll see that with the many things happening around us in the last couple of months, we've had a significant impact on business environment. So one of the things which we notice in general is that the product life cycles are shortening. So let's say 10 years ago, if somebody bought a mobile phone, they would be hoping, they were probably hoping to hold it on for 2, 3, or 4 years or 5 years maybe, I don't know. But nowadays, if you buy a mobile phone, you're probably not looking to hold it for more than a couple of years because technology is changing very rapidly. I think we are now almost entered into 5G, right? So if you want 5G facilities, then your existing smartphones which are working on 4G might not be of great help because 5G requires a different configuration and different technology, right? So in that sense, due to changes in technology and other things, product life cycles are shortening, right? So that's one thing. Companies like Apple, Samsung, Microsoft launch new phones, tablets, and computers every other year within with a life cycle of around 2 years. So they don't really, let's say if Samsung is manufacturing a specific model of a phone now, I don't think they intend to manufacture the same model of phone for more than a couple of years. I mean, even 2 years seems to be an exaggeration because they keep launching new products every now and then, right? So if you think of a company like Samsung, they have a mobile phone at an entry level around $100, mid-level around $500, top end well over $1,000 as well, and in all the segments in between. So if you need a $250 phone, Samsung has it. If you need a $750 phone, Samsung has it, right? So they are looking at different parts of the market, and they are operating in almost every segment. So at any one point in time, I wouldn't be surprised if Samsung has 25 to 30 different models of mobile phones on offer. And having said that, I don't think they would be producing the same models in the next 12 months or in the next 18 months, because they'll be updating it with, as technology evolves, you'll have you'll have a higher configuration phone available at lower prices, right? So in that sense, I don't think they'd be producing the same type of phones 12 months or 16 months or 18 months down the line. So it's always changing, and this has a huge impact on the way companies plan for their costs and they operationalize their costs. Every 8 to 10 years, we see a major financial crisis happening in the world. So we had in 2000 a major dot-com bubble, which had a severe consequence on world's financial markets and companies' operations in general. In 2008, we had a major crash, the subprime crash. And in 2020, courtesy coronavirus, many businesses around the world are facing severe financial challenges. Bankruptcies are on the rise in many sectors, and unemployment levels are probably around the highest levels in the last decade in many countries. But every 8 or 10 years, we have a huge financial crisis which impacts companies as a whole, and then that impacts their cost structures. Now, protective government policies is something very, very prominent since Trump's presidential time in the US. So what do we mean by protective government policies? So, for example, he wants most of the production to be done in the US and not outside. So this is why, since the time he became president, he's been, charging levies on imports which have been coming into the US. I'm sure they always had levies, but I think the levies have increased since Trump's arrival. So we'll talk a little bit about those in the next couple of slides. Brexit is an example of protective government policies. They want to protect their borders, they want to protect their economy, and this is why they entered into Brexit, right? So, and this has implications for cost structures of companies. For example, Airbus, right? Airbus, I think the wings are made in the UK and they're shipped into France for assembly, right? So if you're Airbus, you'd be extremely nervous on the exact trade deal which would happen within the EU as part of the Brexit, because depending upon what happens in the trade deal, the cost structure for Airbus can be significantly impacted. If there are heavy levies on imports from the UK into European Union, then the cost of Airbus might increase, and that might make Airbus less competitive against Boeing in the international market, right? So in that sense, you will see that all these things are linked to cost structures of companies. And all these changes have contributed to the importance of cost and management accounting. To operate successfully in today's competitive environment, companies are making customer satisfaction an overriding priority. And I like to give an example of an Apple store here. How many of you ever visited an Apple store? Let's say between JB Hi-Fi, I mean, just to give you an example, an Apple store, do you see more employees present in Apple store, or do you see more employees in JB Hi-Fi? More in Apple store. So Apple has a record, and the record is that they have the highest number of employees per square meter of office space or retail space. So if let's say it's 100 square meter space of JB or any other retailer versus 100 square meter space for Apple, Apple would have the highest number of employees present. This is to actually enhance customer experience because they don't want customers to be waiting in their retail outlets. So as soon as somebody walks in, there's somebody to help you. But of course, the crowd at Apple stores never reduces. that will probably be making still people wait. But the idea is that making customer service satisfaction a priority is seen in this scenario of trying to have a good level of staffing for a retail store, for instance. Adopting new management approaches. So companies like Boston Consulting Group, Bain, Booz, etc. are constantly coming up with new management practices, and they're trying to sell these management practices to companies around the world, and these guys try to buy it so that they can profit from it, right? So these things are also impacting on the cost structures of companies. Changing manufacturing systems and increasing use of IT. So even in audit, for example, we are using artificial intelligence these days to do large-scale audits. So if you're a company like Google, and if you're an accounting firm trying to audit Google's operations, I mean, look at the amount of data you might have to go through across different countries. And you can't do it manually. I mean, you will need help of artificial intelligence, and I think IBM has a product called Watson, which helps companies do these kind of audits, right? So, you know, all of these things are impacting cost structures of companies one way or another, okay? We were just talking about how government policies, or in fact, I think we said protective government policies impacts cost structures of companies. And I've got a couple of tweets coming off Donald Trump's Twitter account. And this is from January 3rd, not this year, but January 3rd, the year he was elected as president. Now, so this was, I'm not 100% sure if he was elected as president already by then. He was almost, I mean, it was the final, either the final phases or he was elected. So I can't exactly remember. But this is coming around that period. So he said, General Motors is sending Mexican-made model of Chevy Cruze to United States car dealers tax-free across borders. Make in USA or pay big border tax. So he was not happy that companies were importing cars produced outside the US to be sold in the US because he believes that production should happen in the US because that will lead to more jobs in the US and, you know, an economy boost to the US. And this is why he's unhappy about production outside the US, and this is why he made this tweet. A couple of days later, he said, Toyota Motor said we'll build a new plant in Baja, Mexico to build Corolla cars for US. No way, build plant in US or pay big border tax. So again, a very similar comment expressing his dissatisfaction about offshore production because he wants production onshore. Now, you know, obviously many companies took note of this because this can become a significant policy change if he was elected, or if he's already elected, then he will make sure it is a policy change. So many companies took note of this. And what is the consequence? Thank you to Ford for scrapping a new plant in Mexico and creating 700 new jobs in the US. This is just the beginning, much more to follow. It's finally happening. Fiat Chrysler just announced plans to invest $1 billion in Michigan and Ohio plants, adding 2,000 jobs. And this is after his tweets. Now, why am I sharing these tweets? These tweets have significant impact on automobile industry's cost structure. Now, the example is just for automobiles here, but he did similar things for many sectors and industries, okay? So this is not unique to automobile industry in the US. Why would companies be manufacturing outside the US? Because obviously they're cheaper to manufacture outside the US. in terms of labor, in terms of rents, in terms of other overheads. It's cheaper outside, and that's why they produce outside and bring it to US to be sold in the US. But if they have to produce in the US, they'd be paying higher rents, higher salaries, higher overheads, and hence the cost of the same products will become higher. And if the cost of the same products become higher, then the selling prices of the same products will have to become higher. Otherwise, companies would not survive financially, right? So in that sense, it has a significant impact on cost structure of companies. So what would companies be typically doing? Companies will most likely pass on the cost of the border tax to consumers. So some analysts estimate that a border tax on China and Mexico imports alone could raise US consumer prices by as much as 2%. And some other companies like Ford and Chrysler, which we saw in the previous slide, decided to invest in production plants in the US. However, even this will lead to an increase in the cost of production due to higher wages and other costs in the US when compared to other countries, unless Trump administration decides to offer tax incentives to or benefits to the companies producing in the US. So ultimately, it is passed on to consumer if the government does not chip in any funds from their end in terms of tax rebates or whatever. So here we can see how government policies and politics impact cost structures and how that impacts economy and society as a whole. So in a sense, we are trying to link cost accounting to politics, government policies, and then to society as a whole. And this is why we say accounting is not just a technical practice of calculating profits and losses, it is also a social practice because our numbers are impacting people's lives. Now, cost accounting and other calculative practices shape society. The reach of accounting can extend far beyond organizational boundaries. Now, cost saving plays an important role in creating the do-it-yourself phenomena. So IKEA is a very good example of do-it-yourself. I'm sure many of you are familiar with IKEA, right? So what they've done essentially is, they've built a business model around do-it-yourself or partly do-it-yourself because they have this furniture which is coming flat-packed. So what is the impact? The impact is they're reducing labor cost partially because the labor otherwise the company would have incurred is now passed on to the consumer. And similarly, they've also reduced on transportation costs because everything is flat-packed. They can transport much higher quantity of goods within the same containers, and hence they save on the transportation cost as well. In a sense, you have an entire business model which is based on cost accounting and do-it-yourself, right? And then recent research also demonstrates that cost accounting calculations contribute to the creation of a sweatshop environment by helping to maintain high levels of work intensity on the shop floor. Research also demonstrates that pressures to reduce cost tend to not only reduce cost but also puts pressure on wages and living conditions of workers in the shop floor. A role of management accounting in this changing environment. Management accounting and cost accounting can be used in achieving cost efficiency, in accurately determining product costs and prices, effective cost management, and in product comparison decisions. So in a way, it wouldn't be surprising to regard cost accounting and management accounting as a key success factor for many companies. Okay. Here I am quickly listing some key functions of management accounting that we will go through in our subsequent videos. An important function of management accounting is to allocate costs between cost of goods sold and inventory for profit measurement purposes. We will cover this aspect in a subsequent video on marginal costing and absorption costing, which are two different methods of accounting. How costs are split between inventory and cost of goods is an important differentiating factor between marginal costing and absorption costing. Next, management accounting provides relevant information for managers to make important operational decisions. We will go through this aspect in a separate video where we will take a look at what do we mean by relevant and irrelevant costs and how this provides input in making special selling price decisions. We will also look at the importance of management accounting information in the context of making product mix decisions when there are capacity constraints, in the context of decisions on replacement of equipment, decisions such as whether to outsource production or to keep the production in-house, and also decisions such as product or service discontinuation. Management accounting provides extremely helpful information in making those decisions, and we will cover these topics in a separate video on making decisions with the help of relevant information. The final point mentioned here is the importance of management accounting for planning, control, and performance measurement purposes. This will be an ongoing theme in many of our videos, so you will get to see more of it in due course. I hope this video provided you a good overview of accounting as a technical and social practice and the general role and importance of management accounting. Thank you for watching this video. Please feel free to email me if you have any questions. Take care and goodbye.